Hello, I'm Jason Strongahead. In this particular episode, I'm going to talk about how do you generate passive income using this 2020 market crash. So this is one of my favorite. I've mentioned this stock I think several times already, SPYD. And the reason why I believe in SPYD so much is because SPYD is an index that combines all the good stocks, fundamentally strong stocks with high dividend yield, and therefore in the long run these stocks will probably always be on the uptrend. Yeah, that means it will always go up. Yeah, of course during market correction it will still correct, but it has a high chance that it will always go back up. Yeah, and therefore when you are buying at this price, not only you get the 5% dividend yield, you would also get a capital gains, because there's a very high chance that this stock probably will recover up to more than $35. That means there's a $10 upside per stock. Some of my viewers have actually texted me and asked me, hey, you have been talking about only US stocks. How about Singapore stocks? Yeah, so I have got a lot of Singapore stocks that I really like. Okay, like for example, this particular stock, yeah, it kind of is a kind of a monopoly in Singapore. As long as you need to inspect your car, you have to send your car for inspection, and this will be one of those companies that you have to send to. Yeah, so this stock didn't really come down a lot, and the yield has been quite good. It came down a little bit, so you can consider this as still a good buy if you want. Yeah, and the other one would be SBS bus, our public bus, and this one has went down. So at least if you buy now, you have a $1 upside, and the yield is quite good at 4.29%. And what about the REITs? Yeah, REITs are really beaten down. So this particular REIT normally is 8%, but because of the market crash, now you can get yourself a very good dividend yield of 11.6% just by buying the same, just by buying this particular REIT, okay, which is Manulife US Real Estate Investment Trust. And the other one would be Cromwell Real Estate Investment Trust. So this particular REIT is at 8% dividend, but right now it's really beaten down from 55 cents to 37 cents, and the yield right now is 12.55%. So that's a lot of money, you know. That means every 100,000 invested, right? So you will get back $12,055 every month, every year. So that's a very good return, right? Okay. But how about if I can share with you an idea that will turbocharge your passive income? Will you be keen? Okay, so how do you do that? Let me share with you how do you turbocharge your passive income. And if you follow this three way, you can do that. Step one, you would find stocks that has got 100% potential upside. And if you want to get more ideas, you can actually watch my previous video where I share about how do you find stocks that will give you a 100% potential upside. That means double your capital gains. Okay, step number two, once this stock went up by 100%, you close the position and you will reinvest all your money into a high dividend stocks. So how do you do that? Yeah, so for example, you can look at tech stocks. So for tech stocks, what you can do is, for example, this particular one. Yeah, so if you buy this particular tech stock, it is called HINK. So once you buy in, yeah, this company, it is creating subscription-based product. You can do your own homework. This is called the Zurora app, ZUORA app. Yeah. So right now it's at $8.09. So imagine it goes back up to $15. You have a 85% upside, for example. Okay. Or you can buy stocks that are related to the outbreak, and the moment it recover, you must believe that the stocks will also recover. Okay, so if it does recover, probably there will be a very good potential upside. So for example, this particular one called CCL. So CCL right now is $14.41. So all you need to do is just go back to $30. Don't even need to go back to its previous high. You will be able to get a capital return of 108%. Okay, the other one will be like, for example, Park Hotels and Resort. So the stock right now is at $8.79. Don't even need to get it to the original high, right? Just about maybe $25. You will get a total return of 184%. So if you don't need to for it to go back up so high, the moment it double, you can kind of close your position already. After you have closed your position, then what do? You can then pump it to those high dividend stocks. So for example, this particular one, EC World, this is one of my favorite. Oh, but please do all your homework. All these stocks that I mentioned to you is just for entertainment purpose only. I'm not a professional. So if you decided to take a position, please do your own homework or consult your financial advisor. Okay. So for instance, this particular stock I really like a lot, and usual price is at 72 cents to 75 cents. Okay, the dividend yield is about 7%. Right now, it is very beaten at 54 cents, and the dividend yield is at 11.19%. So the moment you buy other stocks and you're able to make good profit, so what do? What you can do is you can take all your proceeds and dump it into these stocks. Just an example, okay? So some people will be like, oh, but when I dump it in, I won't be able to get the stock at this price anymore, which is okay. Imagine this stock went back to its original price at 72 cents or 75 cents, and you got the stock at 75 cents. So you will no longer get the dividend at 11.19%. You will get the dividend probably at about 7% still. And if you will get your dividend at 7% still, do you think you have extra passive income gain? Let me show you the maths. For instance, first one, you take the 50,000 and you invest in, example, the EC World stocks, right? And which gives you a dividend yield of 11.15%. So you have 50,000 times 11.15%. Every year, your dividend collected will be 5,575. And in the span of 10 years, you have collected yourself $55,750 of dividend. However, what if you take the 50,000 and you bought into one of those stocks that you feel has a higher chance to double your capital? So for instance, let's say CCL, which just now we mentioned. So you invested 50,000 worth of CCL into this stock, CCL, and profited 108% in 2 years. So 2 years later, you take the total return plus your initial capital, so that will give you 104,000, and you reinvest into EC World. But at that time, EC World will have already recovered, right? Okay, and the yield won't be so high anymore. However, so let's just say you reinvest at 75 cents, and the yield is now only 7%. So, and you have really wasted 2 years, right? Because you waited 2 years. So you only left with 8 years to collect dividend. Just an example, okay? But the dividend per year will be 9,706. So in 8 years, you have collected $77,653. So this dividend, can you see, is more than this dividend. If you use this method, you have supercharged your way to generate even more passive income. Yeah. Now, of course, there's another way to supercharge both passive income and capital gains as well. So, for example, one of the Singapore stocks, just an example, okay, use it as a scenario, right? Like DBS Bank. Now, DBS Bank, usually the dividend is 7%. What if you buy now? So you don't have to switch here, switch there. You just buy into this stock, and when the market when this stock recover to $26, you have an upside of at least $8, right? And plus, this stock right now is giving you 9.56% instead of 7%. So you just reinvest all this money and just let it compound. Yeah. So can you see the magic of compound interest? Just take a look. I haven't even taken into consideration of the capital gains yet. If let's say you invest 50,000 and 10 years at 9.56%, by the end of 10 years, your total interest collected with 50,000, okay, you will be able to get back $74,592. And that is purely just dividend interest alone without taking into consideration the capital gains. Imagine you include capital gains. You have made a lot more, more than double your amount. Yeah, so these are just some of the ways you can use to generate passive income using this market opportunity. This kind of opportunity doesn't come often. So if you to wait for a very long time, you may miss all this opportunity, and it may have to wait for another 10 or 20 years later before this kind of opportunity hits. Yeah, so I just want to share with you one chart that offers you some insights. So for example, okay, when you look at the GPS, just an example, okay, this is RSI. RSI shows you that the moment the market drops to a certain level, if it hits this zone, there will be a kind of blue color signal. Can you see? Like a blue color signal, okay, over here. This blue color signal that the market is way oversold, and there's a high chance that it will go up. So you can see when the market drop, hit the blue zone, the market go up. When the market drop, hit the blue zone, it will go up. So can you catch the bottom? Yeah, can you catch the bottom? Because you see, the market hit the blue zone, it went up, but after that, it went lower. Yeah, it went lower. So I don't know whether you will be able to catch the bottom. If you really want to catch the bottom and you are just waiting, this wait is at least 2-3 years, you know. And then this from here to here, 1937 to 1941, what, you're gonna wait a long period of time. So what will be my strategy? I don't catch the bottom. I don't care whether I'm right or I'm wrong. I only care whether I make or I don't make. So what I will do is I will buy into those stocks. For example, dividend stock, my favorite. So if when I'm waiting, I'm collecting dividend. So even when the stock continues to go down, I'm collecting dividend. So for example, every 10,000 I invest, if my dividend is 5%, I will get $500 per year, right? So that will be my returns. And I will just keep collecting and wait. It's very similar to your property concept. So when you buy into a property, yeah, and the property, the rental give you a net return of $500, just an example. Do you sell away your property immediately? You don't, right? You just keep collect the rental and wait for the property price to go back up. So this is only based on the notion that you believe the market will go back up and will go back higher one day. If you don't believe that the market will go back higher one day, then investment in the stock market is definitely not for you, because you don't believe that you're going to make money. You better stay out of it. Okay, but if you believe that the market over in the long run is going to go up and it's going to go up higher, then this will be the strategy you adopt. Every time the market hit the blue zone, I'll buy something. Yeah. Every time the market hit the blue zone again, I'll buy something again. So I keep averaging down and accumulate a good mass. And this is the way to make a lot of, or to buy into a lot of good passive income generating stocks. And if you accumulate enough of this kind of stock, it will generate enough passive income for you to sustain your living. And therefore you can, I've seen investors using this method amass about 10 to 20,000 kind of a dividend per month. Yeah, so it can happen to you as well. And this kind of opportunity that allows you to amass such a big amount of passive dividend, right, is only when the market do a big plunge like this. So I would say this will be a good opportunity for you to look into seriously and not to miss this kind of window, because the next window, we don't know when it's going to happen. It could be the next 5 years, it could be the next 10 years, it could be the next 15 years, we don't know. But do you want to wait 15 to 5 to 10 years later before you get another opportunity like that? So if you don't want, you may want to take on this window seriously, and if you have some spare cash, this could be one of those moments whereby you will make a decision, and this decision would have a good high reward to risk ratio. So hopefully you have enjoyed the video, and if you like the video, remember to click like, and if you have not subscribed, please subscribe, and I will see you again next week. Thank you.